Hi guys, welcome back to Harian Research, and today is 16th of January. Let's try to look at what actually happened in stock markets. So without further discussing, I think many of you had some sort of issues regarding understanding how to read this technical analysis, how to read candles. I would suggest you to go to previous videos. I'll actually try to pin down the link in the I button there or in the description as well, that you can check out the whole series regarding what are the basics of stock markets, how to actually read all of this. So we'll be discussing a lot more about understanding charts of other markets, commodities, as well as US bonds, different stocks, currencies, cryptos. So, and the fundamental side it is covered, like I'll make a basic video on how, in order to understand how to actually understand the data of the Sensibull, what it actually means. But that will cover in different video. So what actually happened today, you could again see that like Nifty is again trying to, as it is trying to go up, but again so many times it is falling. This time it failed to go up, even though it gave a opening much bigger than the hammer. Again today also markets tried to go up, but there's some sort of negativity around what is actually happening to the trade deal that India is actually coming up with US. But until unless we actually talk about the structure from, I think I've been talking about the structure from 2-3 days, that until and unless it gives a closing below this hammer candle, that is like 25,500. From the OI data also we could understand this 25,500, 25,700, they're acting as a big support, and you can pretty much understand that Nifty is not actually breaking it. But on the basis of candlesticks, again the chart, we cannot just go ahead and declare that there's some sort of bearish side of Nifty, even though many of the stocks are going up, many of the stocks are going down. There are people who are having their folios going down by 20-25%, but still. But if you actually calculate from the all-time high, the market is almost down by like 2.5%. But the small cap and mid cap index, if you actually think, they are much down. So when you look at Nifty small cap index, from its all-time high, it's down by like 12%. And if you're actually talking about mid cap index, we say Nifty mid cap, it is almost at its it is not much discounted. But the stocks, again, there are specific stocks other than financial services. Most of the stocks are much more down from whatever their levels were before. Let's try to understand, just stick on Nifty and Bank Nifty, then we can talk about other indexes. But Bank Nifty on the other side, if you actually see, so today it formed a big bullish engulfing candle. So we are talking about this 59,600 sort of resistance that the Bank Nifty was not able to crack the day before, right? But today it opened. If you're able to see this, that today the first 5-minute candle opened exactly above the 59,600 candle. That's where some sort of bullish setup, when we talk about the risk to reward, that what sort of, even though I won't be able to give you trades exactly, but you'll be able to understand these are the support and resistance that the markets are respecting in a way. Why? Because these are the support and resistance that are working on a much bigger time frame. When I talk about much bigger time frame, so in this 5-minute setup, when we're actually looking at the candles, every candle represents a 5 minute. From market starts at 9:15 in the morning, it closes at 3:30. So when you can actually divide the whole 6 hours into 5 minutes time frame, 5 minutes time frame, and then that's how all the candles are formed. But when you actually try to make your view much larger, when you're actually going for a 15-minute time frame, or let's say you're going on a daily time frame, or you're actually working on a weekly time frame, so whatever time frames you are able to see, that those time frames will be able to give you the picture. Let's say if you are analyzing the 5-minute time frame, the next 8 to 20 candles you will be able to understand, okay, this might happen in the next 80-20 candles. If I'm talking about the daily time frame which we analyze, you will be able to understand that in the next 8 to 20 trading days, this is something that might happen. But when you're actually looking at 1 week time frame, again, as you move forward, you can just type in 1W in order to get the weekly time frame candle. So here every candle represents a week. All right. So how did I actually mark the support and resistance? If you actually look at it, that this is something sort of rejection from the weekly time frame, but let's try to make it much. So I think I have drawn it on a 3 month or a just yeah I've drawn it on a 3 month time frame, the support and resistance. If you look at the candle of October of 2025, the closing price of Bank Nifty was at 59,581, right? Around our 59,000. I can actually draw it precisely at 59,581. And the highest price of the third 3 month candle was at 60,114, right? And now you look at what exactly the levels are playing out on a daily time frame. Now you'll be able to understand this is where exactly the support and resistance is actually playing out. The moment it breaks this resistance, the chart might head towards on the upside. That's what the analysis have, like this is what we analyze, but still the closing is at our resistance. So now we cannot, this can be a range where the markets can survive for, Bank Nifty can survive for more, or if it gives a closing of this our 60,100 level, then we can say that maybe there is some sort of bullish scenario that we can draw for Bank Nifty. Why Bank Nifty is going up and Nifty is actually on the same sort of scenario? Because we got the data of inflation recently, where the expected inflation, see from the stock market calendar here, right? I think they've removed this particular, but I'll just go and try to back test. Let's go into from 8 to inflation rate. On 12th of January, we got the news that the expected inflation in India year on year as of December, every month they calculate. So they calculate on the basis of year on year means they are trying to compare the last December inflation with the current December inflation. Alright, so sorry. Yeah. So we actually try to look at it that the expected inflation was at 1.5%, but now the actual data came out to be much lower at 1.33%. So this is a positive news. Why this is a positive news? Because if inflation is under control, that means the RBI might actually decrease the repo rate, which will actually impact our bank loans, that the bank loans will be at a much cheaper rate, so they'll be able to make more profits, or the liquidation in this overall system can increase, and that's why there's a positive sentiment that the banks and financial services companies will be making much more money. That's where the increase is coming up. That's what the analysts have to say. That is what something that I can analyze from the data point of view, right? From the both chart. Now we'll just try to type it in. Yeah. Today 16th of January. Nifty is consolidating at the bottom. Still respecting the 25,500, 25,700 range. But what yesterday we were seeing that Bank Nifty was facing resistance at 59,600, but today it did break the resistance. So Bank Nifty broke the resistance of 59,600. Now it is heading towards breaking the resistance of 60,100. So until unless it does not break it, we cannot just go ahead and tell this that this is some sort of bullish scenario. But again, it is heading towards a bullish scenario. Now let's try to look at what the option chain has to tell. So this is 16th of December ka data. From the yesterday's data, we could actually compare that there was a lot of the support of 25,700 and 25,500 was much more stronger, but now today there's some sort of call buying actually happened. So a lot of call writing positions have decreased, a lot of put writing positions have increased onto any given levels of every 50 points difference. That means support is forming at some sort of, so maybe Nifty is bottoming out and there's a good chance that the markets might take support at this point of time again. But the 25,900 is acting as a big resistance. Yesterday 25,600 was acting as a big resistance. Sorry, 26,000 was acting as a big resistance. Still, there's a much likely chance that till 20th of January, till this expiry, the 26,000 level might hold, and maybe Nifty won't be able to break this, but maybe there's some sort of consolidation that can happen. So Nifty forming some sort of support at 25,500 to 25,700 levels, good number of put writing happening below 25,700. So the put writing has increased. That means there are people making more sort of bullish. There are people who are trying to think that markets might actually hold this level and the Nifty might actually go up. Let's try to look at what FII data has to say. So from the previous 2 days, we are trying to understand this, that FIIs are increasing their short positions. Both of them are bearish on Nifty, and client is mega bullish on Nifty. But today, if we actually look at the data, they have bought 53,000 call options, and they have bought 47,000 put options. But the overall position still, if you see that the call option side is much less, the option buying is much less, but still there are a lot of positions that they made. But overall, if you look at it, FII is still negative on the markets. They have like 3 lakh put options. They have bought 3 lakh put options. What Pro has to say? So in Pro, if we actually look at the data, they did some sort of 16,000 call option buying, and they did 41,000 option buying. So they bought like 41,000 contracts of put options. They bought 16,000 contracts of call option. Again, they made more positions on the put side. That means again they're bearish on markets. The overall contract still seems to be that both of the data in together, the call writing and the put buying, both of them shows that Pro is again bearish on market. Still, the data does not change any sort of in any sort of scenario for FIIs and Pro. Now we'll look at client. So what client is doing? Client did some sort of call writing, but they did heavy put writing. So net they made a lot of bullish position. If you are actually looking at the contracts, they have written 5 lakh contracts of put options, but they have bought like 26,000 call option. Both of them shows that they are mega bullish on market. Let's actually see till 20th of January which story actually turns out to be true. PCR I think remains 0.7, so neutral. PCR 0.7 neutral. Options data, FII and Pro bearish, and client is bullish. Client is not bullish, client is like mega bullish. Let's actually see if they will actually make some sort of money out of it. But most of the time you will see that FIs and Pros will be the ones who will be right most of the times. Let's try to look at futures data. So this is the point where I was actually discussing from the last 2 days, that the moment they start cutting their future sell position, the moment the market is going to go up. So as you will see that the futures actually they reduce the futures position, they reduce the futures sell position, they reduced it by like almost how much amount of futures buying they did. They did like 1500 crores of futures buying today. So FII cutting their future sell position. I have seen that like in this kind of scenario, in this kind of scenario, market is likely to go up. Markets become bullish. Let's look at the stock data. What they did today. So they sold like 4,300 crores of stock till still. Again, FII sold 4,000 crores of stocks. I don't know what the story seems not to be very much clear. That again they are overall bearish on the options. They are selling again a lot of till January. If you actually look at the data on a monthly time, they have already sold 26,000 crores of stock, and it's been just 15 days of this year start. So again, from 2025, if we are able to understand the story, they have been just taking off their securities from a very long time, and they've been continuing this. They're not bearish or they're not bullish on markets at all. If you actually look it from the data's perspective. Let's quickly try to understand before we actually come out with some sort of perspective that this might happen. Surprising enough that it's okay. So 15th of January, yesterday our market was closed because of some municipal corporation election happening in Mumbai, but the international markets were not closed. There's a big negative sign for Indian markets that we want to become like global markets, but we still make our markets off with such a small scenario that where the municipal corporation and some sort of election happening. This is not what the ideal global markets would actually if we want to benchmark our markets to their level, we should not be doing all this stuff. But again, this is more of there's an argument that a lot of NSC and BSc, the workers that the people who are doing job there come from Mumbai, and they will actually miss out the elections. But again, the counterpoint is there are not all the employees are from the same sort of corporations. Others can handle the operations as well. They don't have to shut down the market, but that's kind of a lot of politics. We should be actually be very but again, this is a perspective that they should not be keeping the markets start. So yesterday you were looking at the data that the S&P was falling off the cliff, and I was actually telling that maybe they could have head bearish, but when the markets closed, it made some sort of hammer. And yesterday you can actually see this 6,924 level seems it's respecting this particular level. And again, it is like you can totally understand from the chart that there's no bearishness sign, that whatever I could see from the data or from the chart, right? Again, DXY is becoming stronger. At the same time, gold actually fell down. So when the dollar becomes strong, so DXY is like the comparison between gold and dollar. So when the dollar value goes up and gold falls, generally this is what the pattern is. But we have been seeing this pattern turns out not to be very much true, because the DXY is also rising, and with the rising DXY, the gold is also rising. So the correlation is not very much prominent as of now. The ones who actually see this and just do trade, that's not what something is working on. Silver actually went down by like 2-3% yesterday. Again, in the same sort of scenario where people might thought that on the 2 lakh levels that the silver dropped by 6%. Again, this was a confirmation that the silver might head down. Again, the same sort of scenario headed towards yesterday. But this is very risky of an instrument to actually touch at this point of time. First of all, we don't understand like whatever stories that I have been telling, that this is the use case of silver, that is the use case of silver. Samsung is using it. China has cut down its exports of silvers. All that stories are very much true. I checked all the facts, and then I can truly understand that there's a lot of demand of it, this metal, and there's a very less chance of this going very much down in a very short period of time. again, you have to look at, but this is a very terrible point of taking any entry. Maybe you could take entry at all these monthly levels, but still, this is not this is something at this point of time you actually resist to buy, even though you see a lot of potential in it. But again, going from the verdict side of this, the USD INR again depreciating almost at almost at all time high level. That's why a lot of FIIs are getting, they're becoming bearish on our markets. Their money is actually depreciating. Whatever returns that they are making, the returns are getting eroded because the USD INR is getting appreciated and the INR getting depreciated, if you understand the story. So yeah, Nasdaq again, if we can extend this particular channel that we actually were drawing, it is kind of taking some sort. So hammer appeared. This is not the bottom of the channel where hammer is appearing, but you could see from the trend we can actually draw a trend line connecting these. Yes. So this is what we call as asymmetric triangle. So asymmetric triangle, what the pattern is all about, whatever is the pre-trend, so the pre-trend is upward, it'll make some sort of asymmetric triangle, and it will follow the pre-trend. So it will continue going up if this particular pattern holds. So nothing bearish that that seems. EDV TLT is down, USD 10-year bonds kind of going up, small cap index again went down. But until unless it doesn't, they do not break this particular hammer, again it's a very hard say to say this, that the markets might actually go down. US 10-year bond yields going up. US oil, there's a story around oil, like I did not actually read that. Some sort of they like Indian refineries might take a lot of advantage buying all these Venezuelan oil. Reliance is actually coming up with some sort of deal. You currently, whatever the facilities are there for refining Venezuelan oil in US, they are not actually capable of refining that hard oil, but Indian refineries are much more capable of doing it. They might actually import a lot of it and refine and sell it to the world. That story, I think I have to dive more deep into it, but this is some sort of advantage that maybe Indian markets can actually, Indian oil refineries can actually play out. If you look at the pattern of Bitcoin, this is forming reverse head and shoulder pattern. I was discussing the same, I guess. So this is shoulder, this is head, this is shoulder. It gave kind of breakout, but again this might head up. Yeah, the pattern seems to be like it formed a very nice bottom, even though BTC went to like 80,000. Again, these are the levels on a monthly or a 6 months time frame. And that is our analysis for today. I think most of the markets seems to be holding, and there's no negativity that I can pretty much see. And so I think there might be a chance that our markets also support these levels. Yeah, that is it for today. Thank you so much, and I'll see you in the next video. Bye.